the let's do from the sales, right? Let's do sales. I think okay, that would be better. I think let's do it that way. I'm coming. Okay, this is the sales, right? The yearly sales. Is that not so? Now, from the yearly sales class, from the yearly sales, we have the credit sales to be 60% on a monthly basis. Class, what is the 60%? Sorry, just give me that figure again. What is the 60%?
Of the monthly, right?
Yes, monthly sales.
2,040,000.
2 million,
40,000.
2,040,000. What is the 60% of the monthly sales? What is the 60% of the monthly sales? Quickly.
25, 920.
25,
920.
920, right?
Yes, sir.
What is the 60%
30
of
to
the
40.
what do you have?
30 to 40.
30,
240.
okay, 30 to 40. Let's deal with our credit sales, right? Okay.
34, 560.
I hope others are following. Hello? Hello? Yes,
Yes,
you
sir, we
answer
are
now.
following.
Yeah,
Hi, sir.
you just answer that you are following, right? So that I'll be sure of what we are doing here, right? Tolulope,
Sir,
how do you get
34.
30? Wait, I'm coming. How do you get 30 to 40? Again, 60% of what?
Okay. Oh, sorry. Sorry, I've
I'm
been doing
coming.
60% of this.
You've been doing what? Wait. You've been doing what?
I, I've been, I've been doing 60% of the yearly sales. Sorry, mistake.
That's fine. Wait, that's fine. That is why I want you to, because I know some, I know that is why I needed to confirm that are they following and the response, right? So please just follow, right? Just follow, please. Now, it is actually
Okay.
correct. Now, don't worry, it's fine. Now, what is the social? See, the first thing we need to do is that, class, the question says that 60% of the monthly sales. Is that not so? It is still the same thing. If you do, please do 60% of the monthly sales. What is the monthly sales in which year is this? In 2012. Let's say in 2012. What is the 60% of the monthly sales in 2012? In 2012, what is the 60% of the monthly sales?
520.
You say
2520.
when you multiply it by 12, what do you have?
30 to 40.
30 to 40. You can see that it's still giving us the same thing. That is why I wanted to do it 60% monthly. If you do 60% monthly, you will still multiply by 12 because what we are given here, what they gave us here is for the whole year, right? I don't even need this sales. I don't need it. But I don't need it. I don't need these sales, right? I don't need it. What I need is my receivable. That is what I need, right? Just the receivable part of it. Class, if you do 60% of the monthly sales, times 12. You add the yearly credit sales, which is all this. What we want to calculate is to determine the receivable for the period. So what do you have here? For 2013, 60% of the monthly sales of 2013, that is 60% of 4.8. What do you have? Times
So
12.
please hold on. Okay.
Hello?
60% of 48 is 2,880. Hello, sir. Can you hear me?
Yes,
Hello?
2000. Yes, I can hear you clearly.
880. 2,880.
Times 12 for the year. What do you have? What is the credit sales for the year?
That's 34,560. 34,560.
34,560. Now, we go again. 60% of the monthly sales times 12. What do you have? 2014. Oh my God.
51,840. Sorry.
51. The
51,840.
question is, are you the only one in class? That is it. The question is, what are others doing? Please. I don't want to like finish this part and someone will tell me that I did not understand. When you did not press calculator and confirm the figures. Now, this is 51,840, right? 2015 is not given. Now, don't
Sir.
forget,
Sorry, sir. Sorry, sir. 2010 will be 24,480.
24,
480.
480. I wanted to do it monthly, then multiply, but I discovered that we just multiply so that we can move ahead, right? Now, this is because of why do we have to multiply by 12? Because this is yearly, right? Now, from this part, this is the credit sales for the year, right? And don't forget, and it will be paid in the following month. So this is assumed that it is the end of December 2010, which will be paid in the following month, which is January. Now, this is for a whole year class. This is for a whole what? This is for a whole year. Now, what we need to do is that the monthly sales, right? The monthly sales that is being paid, the monthly sales. Now, from the question, we were given the what? The monthly sales, right? I'm coming. The monthly sales of this. What does this mean? It means that we did not receive all this fee here. Did we receive it? No. We just make this thing monthly. 3.4, 3.6, 4.2. What? It will be paid in the following months, class. And what will be paid in the following month is the 60% of each of these. So which means that, right? Which means that this 24,480, we need to say, okay, monthly credit sales. What is the monthly credit sales? This is yearly credit sales. And what is the monthly credit sales? Now, if you have your yearly credit sales minus your what? Your monthly, what did you have? Now, what you need to do is you say monthly credit sales, which is 60% of the credit sales. So we need to go back to that part, right? Now, what is the 60% of the monthly credit sales? What is the 60%? The first one is what?
2040.
2040. So what is the 60%?
2160. 2160.
2160. Next, what is the 60%?
2520.
25. So what is the 60%?
2880.
2880. So what is the 60%?
4320.
4320. Thank you. Now, this is your yearly sales, credit sales class. And this is the monthly sales, monthly credit sales of this. Now, what does this mean? It means that in the whole year, you have a receivable of 24. Then, on a monthly basis, those people that are here to pay you, they are still owing you. It is 2,040,000 class. What is the difference? What is the balance? What do you have? The debtors or the receivable balance for the year? What do you have? What is the difference?
Okay, are we very
Yes. What do you have? What is the difference?
Okay, for the first year, we have 22,440.
22,440. What do you have here?
60.
What do you have?
23,760.
23,760.
760.
Thank you. Next.
27,720.
27,720. Next.
70.
31,680.
31 what?
680.
680. What do you have here?
47,520.
We have
47,520. Class, what does this mean? It means that in the whole year, just like the way we did the purchases, in the whole year, we owe you have 60% of, you have 24 days. Then, the monthly credit sales that you have, this is the monthly, which has already been included here, right? And what do you have at the end of the period as your debtors balance when you remove the monthly credit sales? However, this monthly credit sales will be paid in the month following. We'll still do what? It will still be paid in the what? In the month following. But because you are doing for a whole year, first, remove the monthly credit sales. If you remove it, when did they pay it? Now, when they pay it is in the month following, because this monthly credit sales, it has been included here, but it has not been paid. But when it is going to be paid, is in the month following sales. So what this means that this will be like a December 2010, and this will be paid in January 2011. So therefore, you could say outstanding or outstanding receivable or receivable due, right, will be due in the following month. Class, in the following month, 2,040,040. The next one is 2,160,000. 2,520,000. Why this is 2,880,000? This is when it will be due. Why this will be 4,320,000. So when you add all this together, you have your total receivable. You have your what? Your total receivable, right? Total receivable. I'm coming. Receivable. So this is 22,440. When you add this together, what do you have? Hello?
25,800.
Please, those others that are in this
25,800.
class, are they not with calculator? Okay, that's fine. That's fine. Let's just move on.
Some
So
of
what do
us
you have
are
here?
still on the way. Oh.
What do you have here?
25,800.
25,800. What do you have here?
29,880.
29,880. What do you have here?
34,200.
34,200.
34,200. Next.
50,400.
400. Why this is payable in 2010, in 2015. Now, let me quickly analyze this again. The credit sales in a year is this. Now, on a monthly basis, these people are owing you outstanding. They've not paid it, but the credit sales it has been included here, that the total credit sales for the year. But why these people, they are here to pay you? They are here to pay you on that month, you subtract it. Now, when will you pay it? When will this monthly credit sales, when will it be due? It will be due in the following month. That is when they will pay it. You will have it. And that is why we add it. Don't forget that there is a cash sales. I can decide to say I will add cash sales, right? I can add my cash sales, or I can separate it. Let me just separate it from this part. This is total receivable. I can say cash sales. How many percent? 40%, right? 40%. 40% of what? Monthly sales, right? But
Yes,
if
sir.
you don't want to stress yourself, just do 40% of the total sales for the year. We give you the cash sales. But if you still want to do 40% of the monthly sales times 40% of the monthly sales times 12, whichever one you want to do, you can still do it, right? So pick one. Which one are you doing? Are you doing, or should you do 40% of the yearly sales, or you do 40% of the monthly sales times 12?
Yearly sales.
Okay, what is the 40% of 4,800? What is the 40%?
16,320.
15,
16.
16, 320. Next, what is the
17,280.
17,
280.
280? What we are doing is cash sales. 40% of the monthly sales, which is 40%. 40% of the monthly sales times 12 to get the yearly cash sales. That is what we are doing, right? So 40%, or you charge 40% of the total sales, or you say 40% of this, or you say 40% of this, 40% of this. Okay, so cash sale, 40% of 5,400. What do you have?
2160.
2160.
So the next one is 40% of 57,600.
2340.
20,
2340.
2340. Next, what is the 40% of 86,400?
34,560.
34,560.
560. Okay, so this is my cash sales, and this is my receivable, right? With this now, I think we don't have any other adjustments. We've done that. We've done all the adjustments that we need. We started the adjustment. Okay, we've done for A. We did for A. Okay. Okay, where do we even do it, sir? Okay, the B part of it is what? What did they say we should even do, sir? What did they say? I need to check. Profitability. The B part of the question says that the cash flow. Is that not so? And don't forget the skeleton of the what? The cash flow, right? So the skeleton of the what? Of the cash flow. All these are your workings, okay? So you can call it inflow, or you say receipt. Is that not so? Okay, right? So I have cash sales, then I have receivable. So please, you just need to give me from 2012. From 2012. So please, you can screenshot it. I just need from 2012, right? So 2012, I need the receivable for 2012 to 2014, and the cash sales from 2012 to 2014. So we move. So what is the cash sales? What is the cash sales? 2012.
Okay, cash sales for 2010. For 2010.
2012. We
Hello,
need
sir.
2012. Wait, we need
Okay,
2012.
2012.
Don't forget that
2160.
we have to prepare 2012 to 2014. What do you have?
2160.
2160. 160. Next,
23,040.
23,040. Next,
34,560.
34,560.
560.
So what is the receivable?
Okay, receivables is for 2012 we have 29,880.
Don't even worry. I can copy this. Just copy this. Okay, if this is receivable, we did not have any. Maybe probably they dispose an asset. They have any cash inflow or your receipts. They don't have any, right? Uh, cash flow statement, not profitability statement. Or cash flow statements. So we did not have any information about disposal, or maybe they invest, they have interest income, or so what is the total receipt? Total receipt. What is the total receipt when you add these two together? What is the total receipt?
50,040. 50,040.
60,040. So when you add this together, what do you have?
57,240.
67.
57,240. 57.
Okay.
Answer, that one is 50. The year 2012 is 50, not 60.
Okay. Which one? 2013.
Yes, 2012. 2012 is
2012 is what?
50. 50.
What of this?
That one is 57,240.
Okay. So what is the total of this?
This one is
84,960.
84,960.
84,960, not 89.
Okay, that's fine. Now, this will be your A, right? Don't forget the usual way, right? I can close this as my A. Then I can have outflow. Outflow. Okay, that's fine. So I can have outflow or payments. Don't forget, I say it is payments. Cash flow statement or a cash budget does not involve a cash transaction, does not involve depreciation. Don't forget. So I can pick it up from the payments. What are the payments that they made that we need to add, we need to bring in? First is payable. They have payable. They have payable at the end of 2024. I can just go and copy it. We've done it before. Total payments, which is payable, 2012 to 2014. Please remember that when you want to do a cash budget, you need to include all the years in your workings. Then you can now pick it from there, right? So I can separate these as payable. Now, what other payments did they make? Class, what other payment do we have? What other payment expenses do we have? After payable from the question, what other expenses do we have?
The company purchased the motor vehicle.
They purchased motor vehicle. Is that not so? So motor
Yes,
vehicle.
sir.
Which month did they purchase the motor vehicle? Which month or which year? Sorry, since it's yearly. Which year?
2013.
So what is the cost?
Like, can you go back, sir?
5 million.
5 million. Download this thing now. Just check. Just check. 5 million,
Okay,
right?
July 20.
Yes, 2013. 5 million because it's on a yearly basis. I think I didn't mean it is monthly would have. So what other expenses do we have? We have salaries. So I think we've done that before. We multiply by 12 to get the yearly salaries. We multiply by 12. I think we've done that before. I can multiply by 12. 51 this will give me the yearly salary. So which other expenses do we have there?
Rent.
So we have the
We have
rent,
rent.
and rent is also a yearly rent. I think when you multiply by 12, you have this. Please don't include depreciation. Or depreciation is non-cash items. It does not form part of it. So after that, there is expenses, cash expenses, yearly, multiply by 12, multiply by 12. So, class. So what is the total receipt, total outflow? I think we don't have there's no any other expenses that was paid out. There's no deductions and all that, unlike the other one that we saw, right? What do we have? Total payments. This will be B. What do you have? Hello?
Hello, sir.
Yeah.
Okay. For the first year,
Okay, for the first year,
total payment is 42,440.
42,
440.
440. Next,
Economy. Okay, for the next year, we have 52,720.
52, 720.
70.
Next,
Okay, the last
next
one,
one,
we have 67,280.
60,
67,280.
67,
728.
280, 67, 280. Now, we'll close this. Don't forget our cash balance. What is your net cash flow? What is the difference? Net cash flow. A minus
Okay,
B.
for 2014, 17,680.
2014, 17,
17,680.
680. Okay, for 2012,
For 2012, 7,600.
7,600. So what do you have here?
Okay, 4,520.
4,520. So they have a cash balance. So we can have cash balance or opening, or you say cash balance. Now let's quickly check where they have the cash balance. Where is it? We were told that the cash balance as at 2011. Thank you. As at 2011 was what? 4 million. That is the closing balance. That is the cash balance that they have at the end of 2011. So we can have cash balance. 20 what?
2011.
2011. Okay. So that will be the opening balance of 2012. So that is why you say opening cash balance. Opening cash balance. So what is the opening cash balance? 4 million is positive. So when you add these two together, you have your closing balance. So what do you have here?
11
million.
11,600,000. So the closing balance of 2012 will be opening balance of this. So we can have 11,600.
Okay.
So when you add these two together, but if you have a negative, you subtract it, right? But since it is positive,
okay.
What do you have?
16,120.
16,120.
120. So we can have here 16,120. Right? 16,120. So what do you have when you add it together? What do you have?
800.
33,800.
800. That's 3,800. 800.
33,800.
So this is the closing balance as at the end of each of the year. Distinguished professional colleagues, I hope I've been able to do justice to this question. This is the B part of the question, and you can check examiner comments, and you can see the way we present our works, right? When you check Pathfinder, the way it's being presented is somehow confusing. So that is why we are different from others. We are next gen professional associates. So you can check it out again, right? We'll upload it. Now, what is the B part of the C part of the question? Quickly before we move to functional budgets, because we have to complete, we have a functional budgets. So what is this is B, then we should have C. So what is the C part of the question, class? What is the C part of this question?
That's for current ratio.
Okay, current ratio. Now the question is, what is the formula for calculating current ratio? 6 minutes. Please, when it is 3 minutes to end the call, please let me know so I can create a new link. So, what is the formula for calculating current ratio? Current
assets all over current liabilities.
So current assets divided by current liability. You can have current ratio. Current ratio, current assets divided by current liability. Right? So, what are our current assets for which year? Didn't actually indicate the year for 2014, which is the last year. So, we can say current assets for 2014. We pick it. What are the current assets for 2014? So, we pick it. We have inventory, right? Inventory will form part of the assets. Closing inventory.
Receivable.
Thank you. Receivable, which is the
Cash
one.
balance.
Thank you. Receivable. Then the cash balance for the year 2014. So we pick it. We start. What is our closing inventory? We've done it before. We quickly check what we did in the workings. Now our workings, closing balance 1,440,000. Can you see it? 1,440,000. 1,440,000. 1,440,000. So what is the receivable? Receivable
3
means
minutes.
that
3 minutes. 20 seconds.
receivable means that what you are here to pay in what you are here to pay, right? Now let's check. Where is our receivable analysis? Here is our receivable. This is our receivable analysis. Now, is it 3 minutes? Is it 3 minutes?
Yes, sir, it's 3 minutes.
Okay. Oh, okay. That's fine. Let's quickly create. When the company is highly geared or highly geared, it is above 50%. When it is lowly geared, it's below 50%. So, any other question? Any question? You know how we arrive at the payables from the purchases, right? From our analysis on the purchases, you could see that they are here to pay these at the end of 2014, which will be paid in 2015. And that is why it's some part of the payable. Then your closing inventory, we've calculated your closing inventory. The closing inventory to be 1,144,440. Then the receivable that is yet to be paid in 2014, which will be paid in the receivable year is this. That is how we arrive at those answers, right? Your level of gearing at the beginning is gearing ratio is debt to equity. Then at the beginning we have 30% mix, 30% mix, which means that equity, debt will be 30, then equity will be 70% respectively. So, where are we? Are we still together? Okay.
Yes, sir.
I'm sure see my capacity carry functional budget this night like this. Okay, but no problem. Let's see. Let's see. Okay. Another type of budget we need to look at is functional budget. What is functional budget? Functional budget, we are done with that question, right? Functional budget is being prepared based on the organization function. Mostly, not the entire screen. Mostly, functional budget is used by mostly manufacturing companies uses a functional budget. Manufacturing companies uses what? A functional budget. A functional budget is inclusive of your master budget, class. Functional budgets also include what? Your master budget. And what is the master budget? Is your profit or loss. That is the master budget we're making reference to, right? So, before you can prepare your master budget, you should have prepared your functional budget, right? Because it will really help. It will help a lot. So, functional budget is being prepared based on an organization function. Now, I'll quickly give you the formats on how you can use to treat any day, anytime you see a functional budget, what you will use, the format, just a brief format you need to know about that. Number one is production budgets. Production budget, class. Don't forget that I said most times, those people who prepare a functional budget or organization that prepares a functional budget are organizations. I'm supposed to end so that I can quit. Okay. Functional budgets are mostly manufacturing companies, because you are doing it because you are producing, right? You are producing and you want to know your production for the month of January, or you want to know what will be your production for the month of March. So the first thing you need to prepare under the functional budget is production budget. Now, how will you prepare the production budget? Production budget is being prepared first. You have your sales in units. When you have sales in units, class, when you have sales in units, your sales, let's say sales, let me just like this. Sales, you have your closing inventory, or closing stock, or closing inventory of finished goods, your closing inventory. Now, your closing inventory will be added to your what? To your sales. Do you know why? Because at the end of the period, when you have a sales unit of 50 units and the closing inventory of January will be opening of February. Is that not so? So, your closing inventory of finished goods, you add it just like the opposite of what you are doing in profit or loss. So you can have opening inventory of finished goods. You subtract it from this part when you are preparing your budget. Class, if there is any wastage, you need to factor in your wastage or defective wastage, please spare wastage, okay, like this.
Yes, sir.
Yes, sir.
Okay. Wastage, if there is any wastage, you need to add it because you want to prepare a budget. You know, when you want to do uh 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 when you want to cook rice or when you want to cook beans, right? You need to factor in what's in the process of making that beans. There will be cooking that beans, there will be a wastage. That wastage, you need to add it so that you will have your production budget, right? That wastage that you will have, you need to add it. So in this case, you have production budgets. Sometimes you may be preparing a production budget for January, February, March. You do the same thing January, February, March. So what you have here is your production budget. Please, class, pay attention even if I'm tired, or just pay attention. So B, another criteria, another item under production budget. Class, you've already make a budget that you want to produce 50,000 units. Won't you use material? Class, you will use raw materials, right? So this will now take us to material cost budgets. Your material cost budget, of course, you will use raw materials. Right? You will use what? You will use material to do that. And this raw material, you need to go and purchase it. You will go and purchase it, or you can call it purchase budget, because you will go to the market and buy material. But the question is, what will be your material usage? Class, material usage. You want to produce 50,000 units. What is the material usage that you will use, maybe kg, that you will use to produce that? So we can have material, which will be given to you in the question, material usage to produce the 50,000 units budgeted, right? So this will be in kg. This will be in kg because the first one is the material usage. How many kg will you use to produce 50,000 units in your budget, right? Material usage. If to say your unit is 50,000, then material usage per one, let's say per one class, per one is maybe 1 kg per unit. Class, let me say you can rewrite it as this, as production units times material usage per unit, because you may be given the material usage, it may give you material usage per unit. For you to get your material usage, you need to multiply. If, for instance, you want to production units, production budget, or production budget. Class, am I communicating? Hello, class.
Yes,
Yes, sir.
Yes, sir.
sir.
Okay, that's fine. So your production budget is you are doing a budget of, let's say, 20,000 units. Material usage per unit, you will use 1 kg per unit. What is the total material usage? You multiply it, you have your what? Your material usage. Don't forget its cost. Is that not so? So at the end, we'll multiply it by cost, but let's just the kg first. So let's say when you multiply, you have 2,000 kg. Now it will take you 2,000 kg to produce 50 units. Now, the next thing is you may have closing inventory of raw materials, because you go to the market and purchase the raw materials, right? Material cost budget is purchase budget, because you go to the market, you buy your raw materials. So closing inventory of raw material, your closing inventory, just like the way you did for production. So you add it, then your the opening inventory of raw material, you subtract it from here, so when you subtract it, you have the material purchase, the materials, the numbers of material you will purchase, the kg, material purchase, right? Maybe 20,000 kg. Class, don't forget it is material cost budget. Now, if you have 20,000 kg, that is, you have to purchase 20,000 kg, what will be the cost of this? So therefore, material cost budget, then, so material costs, the cost will be, or you say purchase cost will be equals to the material purchase. You may see some question that the question will tell you that material purchase and purchase cost. Don't allow them to use English. What is the material purchase? What is the material cost? What is the material purchase? What is the material cost? All is still the same thing. So you could say material cost or purchase cost. So material purchase times raw material cost. Let me use raw material cost per kg. Class, if the total purchase is 20 kg, when you multiply it by the cost per kg, you have your material cost budget or your purchase cost budget. Class, am I communicating? Am I communicating, class?
Yes, sir.
So the next is labor cost budget. Of course, when you want to produce, you will use material. That is what leads us to material cost budget. When you use material, now AI, you want to, do you want to use AI to produce it? No. You use labor. Even the AI, they are still labor, right? Labor cost. The labor cost budget will be based on what you produce, will be based on your production, it will be based on your budgeted production budget. Class, look at how it goes. I'm not with anything. No, this PM, I've done it, I think, when I was in 8 years. That is when I did something like, I did, okay, 8 years and PM, right? And then I still remember all these things because I understand it. That is why I did not come with any format. I'm doing it live in class so that you understand it, that you don't need to cram PM. Just understand principle, right? Now, labor cost. How will you get your labor? Labor cost is based on class. Labor cost is based on what you produce. Labor, if, let's say, um, the actual hours, let's say actual hours, labor costs. How will I put, how should I put this labor cost? Okay, now let's get the labor hours that you will use to produce. Let's say this is, you want to produce 50,000 units. So let me get the hours, right? Let's say hours, get your total hours worked will be equals to hours per unit times production budget. We give you the total hours worked, hours per unit. Probably you will use 2 hours to produce 1 unit. How many units did you produce? 50 units. What is the total hours work? Now, if you've calculated the total hours worked, how much are we paying them per hour? So therefore, labor costs is equals to how much are we paying them per hour? So therefore, you can say total hours worked times labor rates per hour. Magana Yakariko, right? Are we still together? Who is against me in this class? Who is against me in this class? Do we have anyone that is against me?
Nobody.
Are you sure? Okay. Okay. Are you sure? Where is okay. Okay, that's fine. Now, if this is established, you can see that it is very simple. These are the things you need to know. Like after labor costs, you may have an overhead cost. Your overhead cost may be given to you in the question. So these are the things that you will use for your production, your master budget. You need, what is it called? There are some elements in the words functional budget that you will use in your master budget. What is master budget? Master budget is your normal profit or loss budget, right? Where you will have sales, you will have purchases, which is material, you will have labor, which form part of your expenses, right? Then, before that, you have closing inventory and opening inventory of finished goods, right? So that is your master budget. We will get there if we see a question that treats master budget. I think I'm done with functional budget. The sketch. I think this is all about the skeleton material cost. I think that's all. That's all. So go and master this format, right? Master it. Let me send the material to the platform. Master this. So when we come tomorrow, our class tomorrow will start at please, can we start early tomorrow? Maybe by 2. I mean, I would prefer it to if we can start by 2 tomorrow. But if we stay, we should leave it 3.
Can we do 3?
Okay, no problem. So we'll start at 3 p.m. tomorrow. What is your assignment? Your assignment is that you should go and master the gonna check. Okay. Your assignment is you should go and master the sketch of production budget, and you check the last example, the last question that we did, right? You check the last question that we did this May 2015, right? So what if you see it again? What if I can decide to repeat it? So you have to master it. So thank you so much, everyone. So do you have anyone that have questions for me? Because me, like this, I don't tire. Do you have anyone that have questions for me?